Alrighty, everybody. Welcome to the Wednesday live market sessions for the private community, and obviously anyone that's subbed on this channel right now. Welcome all to a Tom only stream today. Unfortunately, Tyrone's not able to make it, but don't worry, we've got plenty of fire to come through in terms of the technical analysis. And I want to start in a very special place. I want to talk about this pound yen because, of course, we discussed it at some detail and some length last week. Did anyone get this one? I want to know straight away. I want to know if you guys got this one because pound yen, I would say, was, let's call it technical perfection. We love the perfection, all right? We love it very much. And I think this is certainly one of those levels that's pretty damn fantastic. So let's just talk about what actually happened. Let's talk about the scenario because we can apply this scenario to so many stocks, to so many commodities, to so many currencies in the future. We have a scenario where we have come down multiple lower peaks or lower highs coming through here. We breached the support. So many of you guys will know this as a descending triangle, very clean. We go underneath and we come back and we retest that previous support area as resistance. And then, of course, breach straight back down into the best area that we could be in. So let's just talk about where we are right now. Why have we got this level highlighted? Well, I think it becomes pretty clear when we scroll out. We have a look here, resistance. We've obviously overshot it a little bit. Pretty traditional with any of these kind of falling knives. And now we're starting to create a bit of a base. So the story is actually starting to improve here on the pound yen. Let's get rid of that highlight for a second. See, anybody in the crowd right now in the chat, you tell us what you think is happening right now. What do you think this looks like? Let me know. Dave, I see you out there. You've got to do it. Ian Douglas has missed the hype. Yeah, don't worry, Ian. We'll bring that one back into the main channel very soon as well. I'll have that set up for you next week. Improvements coming, including the private community. We're going to revamp a few things that I think you guys will be finding quite exciting. So a little bit of time in the making, but we're getting there. Accumulation, double bottom. Yas says, no idea, dude. All right. Yeah. So accumulation or double bottom, I don't mind what you call it because really we can call it a pattern if we want to, like a double bottom. We can call it accumulation, which is technically correct. It's an area where buy demand is coming through. And I think you always want to think about the story, guys. You know, members of the private community, it's about the story more than anything else, more than the pattern. Get outside of just thinking about everything linearly, and we want to think about things outside the box. The story here, there is buyers. We can tell. Look at the wicks. The wicks continue to reject. There are buyers here. We have a strong level of resistance, 153.62, and we close above that. And then, of course, we can get some significant movements up to like that 154.50 and potentially greater. That area, though, is going to be a little bit tough, I think. So pound yen did the business last week. Let's now talk about everything else. And, of course, in today's session, we're going to be covering off on the Forex pairs. We're going to be covering off on commodities, indices, stocks, and a little bit of crypto. We'll cover it all throughout the session as much as we can. Let's talk about the elephant in the room and go through DXY. And now I know that a few people have sent me some emails about this and they've said, I got in a little bit early and I think I was a little bit aggressive with the moves. And I've got to say, yes, many people are a little bit too aggressive. They often get carried away with the idea that when they see something breach a level, they believe it's going to continue to go on. The problem is until it's confirmed on a significant time frame, we haven't got the confirmation. And therefore, we might be making a rash decision. Of course, Fed numbers, or in terms of the job numbers last week, sent the dollar index back down. And we almost got that 94.50 breach. This is such a key critical zone. 94.50, if it had breached, what happens? We expect the DXY to fly. And this has caused a little bit of problems for people trading the euro because they were trading breaches to the downside and getting stuck in what ended up being a bit of a trap. Here's the traps. And people have been shorting this. And I know a few of you have done it. Hands up, anyone that accidentally got into this. And how do we think we can maybe stop ourselves from doing this in the future? The answer, of course, is going to be scaling and scaling into our orders as it confirms. But unfortunately, yes, we haven't quite shown the weakness that we thought might come through on the US dollar pairs. Of course, euro going weaker, DXY going stronger. That's what we were trying to go through. Yeah, that will be really it. Yas says, can we have a look at gold soon? Absolutely, dude. We can look at gold very, very soon. Absolutely. Ian Douglas says, haha, hands up. Yeah. Look, it's not that you've done something terrible. I mean, we always want to learn from our mistakes or learn how can we better improve our odds or chances of not losing in these positions. And I think the answer really is scaling. If you want to take a marginal exit out of the level, so let's go through the timeframes here. Let's go 4 hour. So here's the 4 hour close below. If you want to, let's say, call that, all right, I'm going to short this. I've seen what I need to see. I'm happy with this trade. I believe there's a key support. Let's get in. Maybe if you place a third of your position or a half of your position, then when the daily confirms with it, you add to that position. So you might add a third and then you add another third. If you do it this way, and then add a third if it comes back to the conservative entry. If you practice scaling this way, while it's a pain and I understand it's not good, what it'll mean is you're not fully involved in these types of trades. So when inevitably they bash you straight away, because what always happens, you know this, guys, how often do you place a trade and it just instantly owns you? It's always like, or the market knows it's going to kick your ass straight away. It instantly just bam, oh, damn, we got smoked. Well, when that happens, we don't want to have all that position in ideally. And that's how scaling can really help. And I encourage people to think about it. And you can get your whole position in. You can make good money with scaling. It's not always going to be perfect, but the ones that saves you on are ones like this. So let's just talk about the daily close. Obviously, any significant closeout below 115.20 here still will be a big deal. Daily is what you're looking for. And on the top end, we're really just looking for it to get past probably in the middle of this zone. So I'd put a 1.17 as one of the key zones or key areas. If you're looking at the price action on the smaller timeframes right now, you're effectively in a trading range. So you've got to allocate accordingly to that. And I think you're more in a scalping environment or day trading environment on the euro and the other major pairs here. Look at the the pound versus the US dollar. The pound came down, hit the support, bounced off. Long leg doji here on the daily, bit of indecision over the previous supports acting as resistance, and still no decision made. So if you're looking at getting short, the pound might be the better position because this is an indecision candle. Maybe you get a closure below on the daily, you can short it back down, a closure above, buy it back up. That's an opportunity for you based on what we're seeing in this area. Is it strong? It's been better. And I think sometimes we get excited about currency trades. And at the moment, I got to say, I'm not as excited as I have been. If you guys, like last week, the pound yen was certainly presenting. This week, I look through these pairs, and unless you have some good ones, you send me good ones right now, and we'll cover them off, guys. If you have a good one in the community, you know what I like to see. You know what Tyrone likes to see. If you've got one, send it through because I would be very interested in having a look. Euro New Zealand forming a base as well, right around the key level. See the base formation. Now, really, you can only counter trend when you see these types of bases. It's accumulation, as people said, a channel, some people will call it. Some people will even probably somehow find a head and shoulders inverse in this. I don't know, but people do it. You've got great resistance across this Euro New Zealand. This is certainly a pair I've been watching, and I think it's finding some base at this stage. So it might be a cool area to watch out for and then apply your own strategies to it. 163 on the dot here seems to be the zone for the Euro New Zealand. Fred Vandenberg says EU D1 is sideways towards declining trend line. Yeah, so that's right. You've basically got a series of kind of lower peaks coming through, as Fred says, but just sideways at this stage, no clear direction. Odd US dollar, similar. It's weaker than a lot of the other US dollar pairs, and it looks like it's got a giant flag on it that kind of predicts down to, I think, around these areas down here, but I'm not convinced until the DXY makes a move. So DXY is going to be the story, and you want to see it either underneath here, 93.80, or above that 94.50. My preference is let's get it above 94.50, but we don't know exactly what it's going to do just yet. I mean, who knows? Who knows? We're guessing, and we like to instead have better educational guesses based on our TA. All these other currency pairs, mostly looking at scalps, mostly looking at day trades, I think, than the kind of swing trades. We've got the US dollar yen back at the 20 moving average here. It fell off like we suspected it would. It fell off and it came down, and it kind of hit the exact zone that we thought it would as well. I actually thought it might go a little bit further, maybe down to that 112. So there's still potential for this to really rally back around. But remember where that pound yen went. Pound yen was the best trade I think we had last week. New Zealand, very, very similar. So let's get into the commodities. Let's talk about gold. Some of the elephants in the room right now. The people will be like, Warwick, we got you out there. I know you love gold, man. It looks like it's coming back. So we've talked about the December seasonal. Now, Tyrone's made a big deal about it, and fair enough. We've obviously got almost every single December showing us strength here in gold. You know, the back end of November into December back in 20, the December run in 19, the December run in 18, or November into December run. So we're right at that correct period to be seeing a turnaround in gold. And obviously, seasonals are one thing, but technicals will rule. And what do we know? 1832 is a huge problem resistance zone. This resistance zone, every single gold trader knows about this by now. And you might think, well, if it breaks above, then why would we keep buying it if every single gold trader knows about it? Because it's going to trigger all of these fund flows. This is what we call a participation phase. And there's a very real chance that we could see gold come the end of the year at 1900. I'd like to know right now, by the way, before you answer this, click that like button, guys. It does help us out with this channel. We need to get to 1,000 today. I want to see 1,000 subs today, guys. Please sub it up. But I want to know what your predictions are come the end of December 2021. What do you think about with gold? I'll give my prediction after you guys decide. So let's see what you have to say. Gold on week and 1 day is more important, not hours. That is correct, yes. The most important thing for gold traders and generally is going to be that weekly, daily. I do agree with you. I've seen some great patterns appear on the weeklies over time with gold, and they've started, you know, when I still remember running webinars on this. We were running the old school go-to webinars when this cracked, and I went ballistic with Tyrone. I remember it was like oil. You know how we've had some good trades on oil in terms of technicals and everything's looked good. I just remember the target was here, the run was real, and it just went ram straight into that area. And I was very, very happy with myself. And then, of course, it continued on and scaled through. So here comes the recommendations. No, not recommendations. Here comes what people believe is going to happen to gold. And we've got here 2,000 from Ray Lim Andrew, cross 2,000, reckon about 1,900 from Marvin the Martian, 1,900 Fred Vandenberg, 1,915 plus X from Daniel. Dab G gives us 1995, 1920. New all-time high. I like it, Jason. So Jason is the big gold bull. Basically call him Bitcoin gold Jason over there. he's gone all out. All right. So my thought process anyway is really probably around that 1960 to 2000 area. I kind of agree with a lot of you guys. I do think this is going to be a problem. So let's say we close out of here. Now, it all prefaces on getting into the really interesting zone, which is going to be an 1832 plus daily closure with a weekly closure following it. That will be very, very important to get that weekly above as well. We've got that 1900 kind of 21st resistance just underneath. That's where we expect it to have problems. Then once it gets through 1920, let's say it rallies up, then falls back to maybe like an 1880. That would make a lot of sense. And then we rally back through. The next logical conclusion is 1960 for me and the way I look at it technically. And then the next zone is, of course, going to be that magical 2000, possibly even 2050. Everyone will start talking about it really when it gets about halfway up here. So you'll start to see articles written about gold. Oh, it's so amazing. Everything's so great. Gold's back. I think it'll be written somewhere around here to here. And that's when we know that it'll probably dip the next day. So we'll go into the 4-hour and 8-hour charts. Let's have a look. 8-hour chart, a little bit of a pullback off the 1832. What do we expect? Had a very big rally here in the previous week. I could see it come back to 1810 from a technical perspective and then bounce through. Another thing that's very possible is a bit of a consolidation underneath the 1830 area, followed by a breach. If it consolidates underneath, the breach will probably be more aggressive. If it floats straight through 1830, there's more of a chance of a return And that's part of the storyline. You've got to think about how exhausted is this market coming in? How many technical indicators are overbought coming into this as well? Do we have stochastic out of control? Do we have RSI in the overbought area that's literally hitting the top? That's something that I do think about when I read this price action. And I wouldn't mind it to actually consolidate underneath here and then breach maybe before the next webinar. Wouldn't that be nice if we did that before the next live? 1832, watch gold. Let's check out silver. Very similar to gold. A little bit weaker at the moment, but very similar chart, very similar scenario. This one, I believe, has a bit of an inverse head and shoulders on it. Left shoulder, head, right shoulder from a technical perspective. We've seen it act very technically recently with great bounces, great bullish hammers. If we close above 2480, that seems to be the participation phase. And then we're talking about 26 first stop, probably gold hits close to that 1900. And then if we're going to go all the way with silver, 2830. And this could kind of really predict as well. There's so much free space here, so much pattern projection. Maybe gold really is going for 2000 by the end of the year if we break above here. So yes, I'm getting more bullish on commodities the last couple of days. I think we've been more bullish on silver ever since I cried about missing this one. Yes, I know, Shogun, you made fun of me for missing it. He did post it in the private community, but unfortunately we missed that one. Or at least I did. Will Bitcoin hinder a gold uptrend? I very, very much doubt it, Raylan. I very much doubt it. A lot of people think that they're fully connected. I don't believe they are just yet. But I do understand why a lot of money managers and people are starting to move into crypto. It's becoming more regulated. As it becomes more regulated, the bigger guys get into it. And then, of course, they start to apply some alt asset to it. Not only to look cool, but also as just having a little bit of a hedge. Hannah says, we have platinum. What's going on with that one? Let's have a look at platinum. Amazing to think where platinum was so many years ago and where it is now. Yep, another pretty good recovery here. Holding itself up. I'm not sure why this volume seems to be so insanely huge recently, but I don't think it probably is. This could also be considered, a very larger time frame, again, inverse. And this is why you can see patterns all the time and why I talk more about the story than anything else, because some people will look at it this way. They'll draw it from the bottom. They'll say left shoulder, right shoulder. Obviously, the right shoulder is in the perfect area as well. Then they'll draw that out and see if it proofs. And it almost does proof to the top here. Another metal that is looking pretty bullish above both moving averages here on the daily, the 20 and the 50. It's making it slightly higher lows, but not really higher highs. You're looking for that breach out to occur. So similar to silver, similar to gold, it's right around that peak. Good spot on platinum. Thank you for bringing it to our attention. Let's take a look at the weekly, just get a bit of an idea of it as well. Very important, the weekly gets the confirmation close. You want it to close above all these wick rejections. Wick rejection 1, wick rejection 2, wick rejection 3. That would be fantastic if we closed above those. Nice. Tom, would you be able to check out Chainlink when you get a chance, please? It's been lagging behind the other coins, but it's starting to look better, in my opinion, says Muhammad. Yes, we will, Muhammad. We'll do it very, very soon. Graham Newland says, I like the short on gold. I can imagine you like the short at 1832, but if it got through there, Graham, would you really be shorting it if it got through that level? Because at that point, that'd be a bit scary. Let's see what your thoughts are, Graham. I'd be interested to know. All right, let's move over to the stock market for a second here. Let's talk about the indices. Now, I've talked a lot about IWM for the last couple of days, and I still think that IWM will weaken with the other markets and then potentially find strength. I just want to reiterate, the idea is twofold. The idea is based around a seasonal study or seasonal data, a breakout that's coming into that seasonal, the fact that we hit kind of trend lines on the NAS, so on the NDX, on the SPX, so obviously the SP500. And when we're hitting trend lines, yes, we can breach them, but it's probably getting exhausted. The easy money was there, and now potentially we move to a bit of a smaller cap rally. So I'm looking for a potential pullback here. That would be fantastic, I think. Nothing wrong with the pullback. If it keeps going, cool. That's all right as well, if you're scaled in on the longer term. And we're looking for, of course, that all of that chop. So A to equal B like a channel. So ideally it comes down, hits that daily 20 and then bounces off it. US 100 coming into today's session. It's down a little bit, was down a little bit more before. It's starting to weaken here. So let's think about it. We've basically got a series of kind of lower highs. We've breached down. This is the futures market. We've closed below, and now we've kind of just created a little 2-hour shooting star. Possible weakness coming through. What do you guys think? Are you all a bit bearish on this down to something like the daily 20 or the daily 50? Let me know your thoughts. I'm interested to see what the community thinks on that one as well. Graham says no ... And I forgot what I asked. So I'm assuming you wouldn't want to short it above that area. DJ AJ says indices. Yes, daily 50 sounds pretty good. Daily 50 would be fantastic if it did it, but I'm not sure if you'll always get that. Marvin the Martian, Dave believes pull back to the 20 would be pretty fantastic. Yep, I agree. Pull back to the 20 would be a good first step here for the NAS. NAS showing more weakness than the US 500, but I think that's mostly due to Tesla and the big dump that had on it. Again, let's look at the SPY. 3 days of weakness, but very little sell-off, really. Just started a little bit of sell-off here. This is basically negligible. SPX, see how they look slightly different. The SPX gives the reading here of the long leg doji, followed by another indecision, followed by a bit of weakness. Today will probably be a bit of a decider whether we continue to weaken and most likely hit that. I just feel like if today's bearish, the 20 just has to happen. Like, it's so rare that it won't happen. The 20 is very likely at that stage. And then the 50 has historically been more accurate recently. Let's have a look here. So let's say pull back here, 50, pull back 50, pull back 50, new highs, pull back 20, then bounce, then 50, then a bounce, 20. So the 20 should be a little bit of a pick me up. Then it went 50, then it went 20, then it went 50. So every time it's gone 20 first, then it's hit 50 second. Interesting. And sometimes rallied off that 20 quite a lot. So it's been a 20 first, then a rally, then a 50 second. I wonder if that's pointing to maybe 20's all we get here. That's just interesting. I mean, this is completely guessing at this stage, but the 20 we know should bounce. Traditionally, it does from a technical standpoint. Then we rally through December, November, December, and then we come back down to January, February, kind of to the 50 at whatever point that is then. It's an interesting scenario. Get that deeper pullback coming in. David Wetterfoot says 10 and 21 SMA. Interesting. And Apple's still around 150, says Raylim. Yeah, Apple paid us div. So that's why it's floating around the 150. So dividend came out. Good thing about TradingView here is you can see a little div. You can see a little earnings. And we had the earnings, knocked it around slightly, and then Apple sitting around that 150. I wouldn't be surprised for it to actually come under the 150. Of course, it will have to if the market is going to dip here. Some other surprising stocks or good stocks that have been doing pretty okay right now. Obviously, Amazon repairing and recovering after the earnings. Not too bad here. Still like this. Take a quick look at US oil. US oil goes straight back up into the 84s. Fairly good rally here, considering. I've kind of made it my point to just chill out from this one. It hit what I thought was good from a technical standpoint, which was right here. And now I'm waiting for more information. It's pulled back since then. It's bounced back up. It's probably been a couple of day trades in there, but in terms of the longer swing, we need to break 86. So you're looking for an 86 plus breakout. And if that happens over the next week, the next logical conclusion is actually 92. And you would think this, like Kathy Wood's actually been very wrong on oil. And I watched her thing and she even admitted it. And I think it's an interesting case of, she's been wrong a few things recently, but I very, very much like the fact she admits that she's wrong and she owns it. That's awesome. And really, it's all about OPEC being stingy. So what that means is that OPEC for whatever reason, and I've long argued this, they're basically pushing oil up because while they are struggling and they've obviously had some weakness months, if they can get this oil high, get sentiment behind it strong, they know together there's more profit to be made by selling these barrels at a higher rate. So this is the problem with collective bargaining. They're just sitting there manipulating oil. I mean, we want to talk about the biggest manipulators in the world. It's probably these dudes just chilling there, manipulating it, saying, hey, you guys think you don't want oil? Well, we'll just produce a little less, so you have to pay more. I mean, it's a pretty dirty tactic, isn't it? Absolutely. Zodiac says, if Ulrich Nielsen is in the room, thank you for the hint on FCEL. There you go, Ulrich. He loves you for the FCEL. Jay Nibble says, Tom, Christmas crash or Christmas cash? Christmas crash is quite rare. It's happened, but even in my trading career, geez, I've barely seen it. I obviously saw it a few years ago when it happened, but other than that, I can't even think of the last time it happened. A long time, quite a long time. I think it's like 8 in 10 years have very good Christmas Santa rallies. The most, I think the best technical seasonal is actually Thanksgiving, though. If you look at it, it's highly likely to be bullish. Thanksgiving is very green as a stat. I think it's the greenest of the holiday weeks. Oil is got a lot of manipulation, hard to indirectly trade US oil or US stocks. You can certainly trade them, but you need to think of them as more of a trade than a lot of other things. There is a lot of manipulation. OPEC limited the production. That's right, they did. And that's why you've got this increase. Why sell at $10 a barrel when you can make heaps more at 80? Exactly. David Waterford says, just came back from the Caribbean where there is an oil refinery that is about to reopen, which means an oil above 88 per barrel is needed to be profitable. Wow, it's that expensive to produce there, is it? So I think the shale refineries, if I remember rightly, or the fracking or whatever it was, that stuff was about $60. Yeah, the rest were quite a lot less. I mean, some of the OPEC countries were doing it at $8 a barrel or something. So here's Tesla. Now, I wanted to quickly go through something I talked on the video today about, and that is option studies, because I think it was highly likely Tesla would rally today, at least initially. And there was possibly even a educated, you'd call it educated guess that you could make based on possibly something like a 4-hour 50 here and the data that I presented. And this, of course, comes from our robot in the private community that you guys mostly have access to. So what you should do is sometimes check this out. And this is what I call outlier points. So effectively, the market is smashed straight into a put area. Now, a lot of people misinterpret this and they think, okay, well, there's so much bearishness in the market here, then it's got to go more bearish. That's not the way I look at it. If you watch currency trades or you watch like really any large positions of options that are sitting at a technical level or sitting at a psychological level, they tend to actually hold up, expire, and then the price is allowed through. So that's why we call them put walls or call walls. Now, that's my own term. It's got nothing. It's not actually something you can search online, I'm pretty sure. But effectively, I use it only when they are standout. And this is clearly a standout one. So we smash straight into around that zone. And then, of course, what's most likely going to happen then? We get that little bit of a bounce. Unlikely we go underneath this level on Tesla this week. Now, that's just unlikely. It's not guaranteed. Nothing is in this life. But it is certainly a very key level to be watching. And that's something that we bring together. It works incredibly well on the SPY. So if you ever see SPY, huge amounts of puts at a technical level, let's say this was the SPY, the market was coming down and it hit this zone and the SPY had huge amounts of puts sitting on it for this week's expiry. It's highly likely it will bounce off that level. And it may come down later, don't get me wrong, but it's highly likely it will bounce off that level because it will not want to expire underneath this price. This is what they call the put wall. Gold at resistance? Yes, it is. Tom, can you have a look at the LIT ETF? Sure, we can check that out. Let's have a look at it now, actually. LIT, which I assume is the lithium ETF, global lithium and battery something. Very nice trading throughout the year if you've gotten into this one. It's funny how lithium has these massive ramps on it. Here's the ramp that I remember very well. In comparison, this is a ridiculous ramp. I think this is why sometimes you're a little bit too early on technology. Good lesson to learn here. Lithium, big rally. Tesla cars are the next big thing. Everything's amazing. Everything's amazing. Oh, we're too early. And I think that's kind of like where genomic resequencing is. I think genomic resequencing is close, but it has gone in the past like this. 3D printing was another example. I believe space is currently the example where everyone's getting carried away with space and we're all going to fly to Mars every second day and all these things. Yeah, probably, but it's going to be in time. Marijuana is another one that's happened a lot. They've had big rallies followed by big busts. So this ETF is certainly on fire. It's probably meant to be on fire for good reasons. The demand would be through the roof. The only thing you can really look at here is the weekly 20 has been a pretty decent pullback. It's probably a little bit exhausted at this stage in terms of how far away it is from the 20. Sometimes you can just take measurements to see whether it's a little bit ridiculous. So here it's about 27, 28%. Currently, we're looking at around a 16%. So it's done more. Let's go down to the daily. It's very far. Oh, it hasn't been pulling back to any moving average. So it's a bit extreme. And like the rest of the market right now, I have a feeling that it's kind of topping a little bit here. Could it keep going? Yes. If you're following it, you're just trying to find the moving average, being the 20 moving average here, and you're waiting for it to either continue to rally off the 20, or if it starts to find weakness, goes underneath the 20, it's probably going to send you some alarm bells of whatever your system might be, scaling, whatever else is. Let's have a look at FCEL. This was a Ulrich pick. A lot of people liked him for FCEL, which is cool. So he spoke about it around here, I believe. And it's gone through. And I think it's kind of hit a level or a range that's a little bit of resistance. Maybe it gets to 12 first. So 12 is certainly a target a lot of people have, but I would say be careful on it here. Let's have a look at SPLK, Splunk. This is one that I've been talking about for quite some time, the old Splunk. And Splunk has just broken out again. So yeah, towards 190 we go, I hope, for Splunk. Slow and steady wins the race sometimes. CRM and Splunk, I think, were really underappreciated stocks in terms of real companies that make real money that aren't hyper stocks, but they certainly were cheap in comparison. I mean, you might not have made, blitzing cash, but we started talking about Splunk down here. I remember the double bottom. We talked about the recovery and we got lucky. That next day it exploded. And then, of course, we've got the inverse head and shoulders at the moment with the capability of 190. So, yes, breakout, fairly significant. Small little pullback, ideally back to here. And then hopefully return to 190 will be the idea. Let's have a look at TSM. That's Taiwan Semiconductor Manufacturing. It's been weak for some time. Even though the semiconductors have been so strong, this thing has been hideous. It's approaching that 125 resistance area. This will be the key break. I would watch it on the weekly more than anything else because it hasn't broken a weekly 125, I think, ever since that original one. So really with TSM, you're taking the distance, you're extrapolating that out. It proofs really well with the previous high, and there could be some good participation, swing day trading coming up on this. Well worth at least highlighting your area and potentially setting alerts for it in the future. TSM at this stage, though, it's just going into a resistance, about 125. Daniel Polk says, thanks for reminding me. I have to look at 3D printing again. Yeah. 3D printing was, wow, that was like one of those things from 2013, if I remember rightly. It never truly took off, but there were some companies that did well off it. Obviously, it was more a commercial thing. Everyone thought every single person in their house would have a 3D printer and we'd all be printing things, but mostly it became hobbyists printing stuff, and then obviously for the business practice. That's how I see it. I mean, I'm probably wrong, but yeah, that's the way that I kind of saw it there. Let's now go down to FCX. So FCX, this is a request here. Hi, Tom. Keen to look at FCX on the New York Stock Exchange on the verge of cracking a key level for a 10% trade. Yeah, I agree with you on the 10% idea. It's down 1% today. So you're looking around that 44-ish from $40. That's correct. Weekly actually closed quite... Oh, wait, weekly's still open, isn't it? Yeah. So this weekly close, if it did happen up here, would be big. Got long leg doji, weakness candle. Let's get a decision made, hey? And daily will also be something you're looking at. Let's have a look at the daily. Just so... Oh, it's so marginal. Just need it above here, just above the 40, hey? This is all we need. Just get above 40, show us the weekly close as well, and give us the 44.50 ideally. Very nice. Daniel Polk says, and TeamViewer looks like it's dead in the water. TeamViewer? You mean the company? Is that like the company literally? I didn't even know that was on the market. Really? TMV. No way. This is oh, yeah, I could see this just getting obliterated. Look, there's so many better softwares. And I believe that got hacked a lot. What's my view on IBB, biotech sector? I really like the biotech sector, but it's all about market timing here for this one. I think the problem with the biotech sector is IBB is filled with Moderna. And I think that a few of these, it's kind of like really tough because there's so much Moderna in it and so much saturation on the top end, if I remember rightly, on IBB when I looked at the sector breakdown. I really like many biotechnology stocks. I also think biotechnology is one of those mid-cycle kind of sectors. So if you believe we're in a new cycle here of the next 5-6 years, then we should be seeing 2022, 2023, maybe even to 2024 be the years for bio. Now, I'm not sure if it's going to start here. My guess was 2022 initially coming out of this pandemic. 23 would be very likely to be still going, and then 24 will probably be where it's slowing down. So I'm looking for a multi-year rotation here. I don't trade it. I mostly just look at it for its investment properties. And you'll know I'm more consistent with maybe the genetic resequencing companies. They are all over the place right now. And you can't just get one, because the problem with them is you don't know which one's going to win. These CRISPR style stocks, we got nothing. I mean, I'm not a doctor. I certainly don't know. Zodiac 89. Tom, can you please have a look at MTLS? Sure. MTLS. Materialize. Then we'll do a bit of crypto in a second as well. Go through a few more stocks. Oh, not bad. Nice. So it's obviously shocking what happened to it. This was a shorted stock or just a hyped stock coming into that the great January, February boom and bust of stocks retail traders got into. But you are watching a nice recovery here. So let's think about the story. The story is good. We've got a base around $20. We've got a great breakout here on the weekly that's occurred. And if you're going to go with where it's recovering, this would be correct. I mean, you slightly higher volume, not improved that much, but slightly higher, nowhere near the over here. But it is broken out. It's above the weekly 20. That's significant. Let's go to the daily again. Obviously above the 2050 here. If it does pull back down, it's going to meet the 20 around this area. It's a good base. I've seen worse. If you like the fundamentals, probably a mixture of fundamentals here. Earnings is over, thank goodness. So that's good. Obviously wasn't a shocker. Yeah, not bad base. Tom, can you have a look at NEO? They had earnings yesterday and could be interesting day. They did. Now, I missed the NEO earnings, I think, because there was... Oh, no, nothing really happened. So maybe the earnings was, I thought it came out later after I finished the stream. Maybe it did. Was the earnings good? 20 moving average. Obviously not shocking based on the pre-market. 0.71. The 5.93% is mostly Tesla coming down, I think. Not sure I love the technicals here on any particular thing. People have been calling the inverse head and shoulders. That's based on where that analysis is, but we didn't break through the shoulder properly. So, yeah, you're really looking for a turnaround here after that earnings horror is out of the way. 2050, it's crossed on the 8-hour. Take of that, which pretty much daily. It's okay. It's not what I would call like really cool. NDX might form a power low in 19 minutes. A power low or lower? Was a beat. Okay. So it's holding, and that's why. Fisker. Let's check out Fisker for you. Fisker. Right at resistance for this one. Take profit area. Earnings is done, which is a nice benefit. You get through this area because of this kind of move. Usually I expect a bit of consolidation or at least a pull up, pull back down, and then rally. So I think you're going to get other opportunities, but you never know. All over the place this stock has been, but yeah, it's at what I would call a technical resistance at this stage. Right on a pretty big technical resistance. Hi, Tom. Can you check out Plug? Have a December 35 put. Yeah, we'll check out Plug. So Plug earnings out now, I believe. See, I thought this was recovering and doing an okay job at moving up. I could see pull back here and then recovery. You've got a 35 put. So you've got around that level. Earnings is out, 39.29, down 3.51%. It's currently consolidating quite a lot. So you've got a lot of chop. Weekly still looks okay. It's tough on these stocks. They're not great trades. They're more investment kind of stocks if you believe in them. That would be the way I'd look at it. Pull back down after this, maybe a little bit of weakness because of the market. Let's say the market is going to come to the daily 20. This might come down as well. And then hopefully a rally after that for Plug. I kind of see that 35 being the area. Okay, let's go through a couple of cryptos. So we'll start off with Bitcoin. Let's talk about Bitcoin. So we're sitting at 67K-ish. Very strong Bitcoin market last couple of days. Found a bit of a indecision style candle here at the peak. Day traders know exactly where they're looking because they're all sitting exactly here waiting to find out more information. So let's look at it on a 15-minute chart. We don't often break them down this much, but let's just have a look at the story so far. So this is the way that I have Bitcoin drawn at the moment. Get underneath this support. You open some shorting floodgates, I believe. A few algos might come in and start to have a little bit of a go at it, down to maybe like a 65 or something fairly quickly. At this stage, kind of looks like a descending channel on the 15-minute. So this is what I mean. We don't always get in on these timeframes because when we're running the streams, it's just not ideal to go through 15-minute, 5-minute, 1-hour charts. But yeah, series of lower peaks. It's kind of similar to the way we looked at, what was it, pound yen, yeah. If we breach underneath, get the confirmation, possibly pull back and then goes back down. So there is weakness here in the Bitcoin on the smaller time frames, not on the longer time frames, but on the smaller time frames. Ethereum's kind of similar. It's actually trying to breach to the upside though, a bit stronger than the old Bitcoin, and ADA sitting around this 223. We're looking for a 230 plus closure breakout on a significant time frame, like a daily ideally. So it came up, hit straight into it, and now it's consolidating underneath. We had a request for link, so let's do link. Here it is. I've liked the generalized uptrend here for Link for a little while. It's approaching that resistance, $35, very key resistance. If I put the horizontal on, check this out. Look at this. Wow. Wow, 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 wow. Look at this. What a zone. Series of higher lows coming into it. It really looks like it wants to have a go. And next stop would be about 44 from a technical level. So I can see why you think Link's improving. It's been very behind the times. It's had some great bases on it. But even with great bases, it's taken a little while to get, feisty. Because if we go and have a look at the great base, so that's 27%. It's no slouch, but this was a fantastic trade-off level. Really good. KSM, another one that's had some pretty solid levels. Great level here. Very happy with the $500 on KSM. And now back to the 450. Previous resistance becoming support, question mark. UEC, uranium energy. A few people have been talking about uranium again. Last couple of days been very strong in these. We had a great member of the community find it down here for us, this particular stock. It rallied up, hit our resistance, sold off, consolidated, and then, of course, it's rallied some more. I do feel the uranium stocks are getting ahead of themselves. Maybe a little bit too much euphoria coming into these. See how far away it is from the weekly 20? I'd be very careful, and I'd be following it with your trading system, whatever that might be. So intensely watching this one. It's gone away from even a 1 hour 20 now. It's like a 15-minute 20 or 15-minute 50. So aggressive trend. You don't want to necessarily get off the aggressive trend, but what is your plan? No worries. That's okay. Portnoy. All right. We'll keep going through a few other stocks. What else have we got here? Kind of hesitant to really go through too many stocks, I think, at the moment because of our thought process on these indices. And this is my problem. How can we really be buying too many stocks when we're seeing what we're seeing right now? We're down 0.35% here on the NAS right now, 0.22% on the US 500. We've got a daily 20 tantalizingly close, which is still multiple percentage ways away. So I think what really the story is now is, for me, if I was looking towards the bull side, which you probably should be in markets, generally speaking, you've got to have your plan. So I want everybody to tell me right now, chat, go. Tell me, 94 viewers. Let's get above 100. Can you give me some likes, guys, if you can? That'd be great. Let's get an idea of where you guys think, or which stock you're going to be looking at potentially purchasing in this next, let's call it miniature dip, if we believe it's a miniature dip. What stocks are you looking for? Hey, Ken, good to have you here. No plan. I missed the entry. Okay. Yeah. Don't want to chase it. Yeah. I think the uranium stock's a little bit tough there to chase from a technical perspective. It's pretty damn aggressive. Like these lithiums, they're very aggressive right now. So what are our thought processes on if we did get a dip? What are you guys looking at? Which particular thing interests you the most? Is it a seasonal based thing? Is it just you're looking for anything you can get your hands on? Another stock that I've been watching a little bit. It's done us dirty almost before. I believe it did us dirty over here, if I remember rightly. It's the old Boeing. It continuously plays havoc with its recovery process. Here's the downward trend. Here's the daily. And you'll notice it actually daily broke out. I'm just not convinced by it yet. AMD trading at 150. And this is why the stock market kind of needs to have a little chill pill. 150 on AMD. I'm convinced that AMD will end poorly in a few years. I've seen this stock go very long and then very, very crashy. It's done it plenty of times before because I feel like the chip manufacturers kind of switch between each other in terms of success. So here's some other great, that's not the great decline. Where are we? Here we go. Here's the 06 decline. And here's the one I remember. That's that 18 decline. Was it $34 down to about 17? So it wiped half. Look at these very aggressive candles. Dave says kind of likes Fang at the moment. Yeah, Fang is an interesting index. Fang's been pretty consistent on the 20 on the weekly here. 20 daily, I'm not sure if it's been so much. Gold stocks, says Mike H. What else we've got here? Amazon, MP, tech stocks, and short the VIX after correction. Interesting. You could certainly do that. Graham has PFE and a Pfizer. We're going to pull back here on Pfizer with their new pills, gas stocks from Mike H as well. AAPL, Microsoft from Henry. Interesting. And we got some hydrogen calls. Looking for a scalp on the barber. You are a brave person. I guess the scalp is not that brave. Probably more the holder is more brave than the scalper. Oh, no. Marvin says Fang. He only wants FANG, not Fang, the index. Also hesitant at the moment. Indices looking toppy, interested in energy stocks, pulling back and then giving an entry. That aside, just trying to find good setups. Yeah, I think it's a bit tough to really go long when you're seeing compelling evidence like this from the technicals. And I think that's the big problem here. We're technical analysts. We sit here all day. We draw funny squiggly lines on charts. And we look at these prices and we say, geez, that's looking toppy. It's got a lot of reasons behind it. We've got mid-season type of stuff. We have really long extensions away for some of the stocks that have been outperforming the last month. And this is a very, look, I got to say, I love this channel. This channel has been so beautiful. I'm very happy with it. And I would love to see it hold up again. So I just would like to see it hold up. Okay. You guys love the channel like I do? Probably not. If you're still around in 10, 12 years trading the markets, investing, and you'll fall in love with the channels like I do. When you see technical perfection, you get excited. Coin got slaughtered on earnings, says Trishan. Yes. Did you really expect much difference when it went up so much? I mean, that was almost a glorious, that was 64%. It has to really belt earnings out. And I've said this a few times, crowds going for it as well right now. That was one that we saw in the stream when we did it in the close. We had that stream and we found the closure. I mean, it was certainly significant. It's a significant closure above previous resistances ahead of earnings in 23 days. And there's precedence for why this is happening. If you look at Net, which is a competitor, Net ran like just absolute bat out of hell. And then it not only ran, but it held up. Very rare for a stock to run and then hold. Very rare. Usually it runs and then it becomes a sell fact when it's this big. Even I believed it was a sell fact for sure. The good news is, even if you believe it's a sell fact, you always have that chance, if you're wrong, to get back in. And realistically, has it done anything since earnings? The answer is no. It hasn't. Very little. All right. So I guess we'll leave it there this week, guys. I know it's a little bit lackluster in the fact that we don't have as many key technical setups, but I think it's because we're watching these, S&P 500, Nasdaqs. And if I'm leaving you with anything this week, we do love gold and silver at the moment as well. There's some interesting stuff going on there. If I'm leaving you with anything this week, it's that you've got to have a plan. You've got to be prepared for what's your favorite sector, what's your favorite stock should a dip occur. If you missed out here and you weren't prepared to pull the trigger when things happen, such as technical breakouts, then you've got to always have a plan for your next time around, because sitting there having analysis paralysis is only really going to hurt you. And once you start to have your own plan, have your system, have your methodical approach, then you can make better decisions. So I hope today's webinar, live session, whatever you want to call it, helped you out. We went through some great stuff at the beginning. So if you missed that, scroll back to the front. There's a great trade there that we talked about last week, and then that worked out. And we've got some really key learnings that I think are just great for anyone that's coming in and watching this for the first time. I hope you all have a very good day. Remember, tomorrow there will be no live stream. So that is for the close of this session, for the close of the Wednesday session. Unfortunately, I will have to take a session off there, and I will come back the next day with a whole new session, with a whole new vibrance, and we'll be ready to kick some ass in these markets. So let's hope it pulls back a little bit here. If you don't want to pull back, too bad. Sorry, I kind of want it to pull back now. No, it's all good. Whatever you need, I hope it happens for you. And I personally wouldn't mind it to come down. You know, that would be quite nice. Catch everybody. Tyrone will be joining us next week. Bye for now.